Hi and welcome to the market alert for Friday, the 21st of August 2020. So big tech stocks, bonds, Bitcoin and bullion bid as a dollar dive continues, which we'll look at just a bit later. So let's start off with yesterday's trades in the DAX. The volatility wasn't too bad in the morning session, a bit quiet in the afternoon, the first part. But let's have a look at the morning. We can see the market managed to trade back up to the low that we spoke about in the market alert and the 200 MA before the market opened as a bit of a support area for prices. So let's fast forward. Again, you can see selling down to the 200 bar moving average there, and the market then picking up at this point. Buy orders down in the low. Prices come back and then break the low as there is no interest on the buy side, straight down to the BRN, the round number, where we see profit taking happening here with the green bar. So the pros are taking the money off the table, and then the market trades sideways back towards the low, becomes a bit of a magnet. However, we can see that price is trading up to the 20 bar moving average with high volume. And then as I move forward, the market's hit by selling again back to the big round number there of 12,800. This time the market goes through, and again you see them trying to buy back the market as prices come off the lows in this bar, and the volume has increased there as well. So quite a volatile opening in the DAX. Again, you can see them trying to bring the market back, and then they manage to get it back above the 200 MA on a green bar, and then back to the low, which is the mission accomplished, because that's what the market wants. They want the market above the low if they can. However, if it can't hold above the low, which you'll see in just a moment, then the market will be moved lower, shake out the week longs, and then bring the market back, which you see at the moment we're still stuck in this sideways range. But again, notice how powerful the 200 MA is. Prices brought off this low, and what I've done here is put in some resistance areas just so I can see if we get a buy signal where this is likely to be. So now we've got some potential weakness, and then the market trading up to the 12,869. And again, we have further potential weakness. This time it's increased, as you can see there by the volume. I'm just going to fast forward here. So market's run out of steam. There's no buying. It all seems to have disappeared as we're headed towards the BR. And then we have a potential sell signal. And this is not the ideal place to get a sell signal. And one great thing about doing these longer videos in the morning and going through each bar, it highlights certain areas where I can certainly improve the algorithms to potentially offset this, and also to get into the market sooner as well, with looking at this on a bar by bar basis. So we had a potential sell right at the low. Not the most ideal of places, I'll certainly agree with that. The market came back to the S1 and the 200, the 20 bar moving average there. And then eventually, again, you can see how powerful this is as the market just sits on the previous day's low, and then eventually, having hit the 200 MA, you can see the volume building here, and you'll see in a second that prices actually turn green inside of the red, indicating that there's been some profit taking at this level. However, prices remain below the 5 bar moving average and eventually break the 200 MA. And if you wanted to collect profits at this level, nothing wrong with that. As you can see there, prices stopping once more at this area, but eventually managing to break down and trading down to the previous low here, and managing to hold there for a moment or two before prices do go down to the S2. And then again you see prices coming off the low in this bar at the BRN at the S2 with an increase in volume. and then prices remain sideways. The volume drops off, and prices come back towards the 20 bar moving average, and then tiny bars, apart from the odd one or two that move the market to the upside. And again, this is required to go through the 200 bar moving average. Bit of selling here as we head back towards the low, all rather predictable at these levels, but then we get into the 10 o'clock close there. Meanwhile, in the afternoon, a very quiet session, but like I say, things do change, and towards the last week of August, things pick up. I'm going to look at the volatility index in just a moment, the implied. So the afternoon, the market sideways. We had a sell signal, which was just filled. And as soon as this happened and it started to bounce back, and I was looking at the volume, and I could see immediately that they were going to buy back this market. You see the volume building there, and you'll see it turn to green. And as soon as this happened, I could see that it was likely we were going to make our way back to the BRN and the 20 bar moving average. The Dow was also moving higher at this point as well, and through we came. So this switched the trade to the upside, and then the market traded sideways on nothing, but managed to hold at the BRN and then up to the scalp. And then we had the news coming out, which wasn't ideal, so having to exit the trade. And then you'll see the market move to the downside on the news, and then come back with an increase in volume there. And then it switched to red, and the market then traded sideways. And as soon as it comes back above the BRN and the 20 bar moving average, this area here, the damage is done to the downside. We've also got a Fibonacci retracement, which I'm not including at the moment in the analysis, but I will be, just to show you how important these areas can be and are. So we had the green bar, which is a shame because we didn't get the signal, because the momentum had disappeared. We were looking for something like this type of bar, but it had vanished, which is a real shame, because that was the last time the market looked back and then traded back up to the 200 bar moving average and the low, and then continued above the 5 bar moving average until late on in the afternoon. Prices come back to the 200 MA. Again, you can see how prices are coming off this, and they managed to buy back. The volume is subtle, but they still managed to bring the market back. And then we get the potential weakness coming into the market, indicating that we could see the end of this run to the upside. And that's precisely what we see at this time. And then you've got the market finding support at the 200 MA level once more. Okay, let's have a look at the overnight, see what the market's doing. That's the Dow. Let's have a look at the German DAX 2 minutes. So we've got the market gapping higher. Just compress the data there. So the market moved higher. You can see where we are with all of the pivots. We've got the R1 and the high. So immediately I can see that prices traded to the high, failed to hold, traded down to the 200 bar moving average, which has been a bit of a magnet. And here we've got the DP level as well. So let's just drag forward, see where we are. Again, you can see how the 200 bar moving average has been holding prices. It looks like it's a bit of weakness down towards the close, and then the DP level is going to be crucial as well. Let's have a look at today's news. We've got French flash manufacturing, German flash as well. And a lot of this first thing, 9 a.m., 9:30, and then we've got flash PMI from the US as well, and also the UK. So all manufacturing today between 8:15 and 2:45, but 9:30 a.m. for the morning session there. And in the daily charts, price is still that sideways move persisting there. And you can see how prices came back to the previous day's high, but now back below that 62% as well. So a bit of weakness around at the moment as the market waits for the news there. In the Dow daily chart, again, you can see that prices broke to the downside yesterday, and surprise, surprise, they brought the market back before the close. In other markets, let's have a look at the dollar. As we saw on the headline this morning, dollar breaking down again. You can see this moving to the downside, and this is good news for the silver trade. We look at the daily chart first. You can see prices remain to the upside. The volume is still very heavy in this market. It just needs to break to the upside and take out the $29 level there. In the weekly chart, price is also continuing to move to the upside inside of last week's trading range. The volatility has dropped a bit there, but in the bigger picture, we've got a long way to go. And you can see also this massive increase in volume and activity in the silver market, but we do need to take out the 28.37 level. We've been up and looked at it, but this week, but it needs to be taken out. And what else have we got? Oh yes, the volatility. Let's just have a quick look at this. This dropping in the Dow volatility dropping to 1907, the lowest it's been for a very long time since we saw the onset of the COVID. The lower this goes, the bigger the correction will be in the underlying market, i.e. to the downside. So hang in there, because when it breaks, it's well worth it. It's the smoothness of the trades is just wonderful, but we just need that momentum to pick up. It's being quiet, but as we get towards the end of the school holes and the schools go back, you're going to see this pick up. When you get this churning in the green, as you can see here and here and here, eventually the market breaks, and you get a spike up in the implied volatility. And if you want to see this over the long term, all of these lows that are put in place here, that prior to the COVID correction, you will see big corrections in the underlying market. It doesn't look a lot here, but take it from me, there's several hundred points in corrections, and this could be the new low for sort of the low range, as we see here. In here, where the market is now coiling at 19, where it used to be down towards the 10 target, where once we got down to this level, we would see the underlying market, i.e. the stock market, make those corrections as you see here. And then of course you've got the big one there. Okay, that will do it for today. If there is anything else to report, I will let you know, but as ever, thanks for watching. See you in the next one.